market right now.
Yeah,
Prices are frozen and buyers aren't buying and sellers aren't lowering.
yes, it's definitely frozen, as we all know. Question is, how good is it going to be next year, or how bad?
Well, there's going to be challenges that are going to affect the market next year, and that's kind of what we want to talk about, and how it is a weird housing market, and depending on these factors will determine kind of what happens next.
Right. So let's jump right into unemployment, because that's the big one that you kind of identified over the last couple of weeks. We've been digging into this a little bit. As we all know, the optics are 4.2%. We hit 50-year low a year ago, but it's actually trending up.
Yeah, and we were talking, I think, last week about underemployment too. So you don't just have an unemployment issue, but you also have an underemployment issue. So basically, as we start to see the unemployment numbers, we also have to look at people that are taking jobs that are making less money than they previously were earning. Because along with inflation, that's going to really start to affect what people can afford.
Right, and there's a few things going on, right? We're going to tackle this, but the one thing is, inflation's hitting employment. And so on one hand, people are saying that they're trying to reduce their costs. One of the biggest costs is labor. Labor's gone up. But also we got AI, automation. You got work from home, which last year was like 32%. They're saying it actually is going to go up to 50%. So that could be very, very interesting as well. And that's more like a part-time.
Yeah. Yeah. Well, and what's interesting is, people are looking at the unemployment issue in an interesting way, because obviously unemployment and job uncertainty is going to lower the demand to buy houses, but it's also going to affect the supply as well, because, you're not going to have people wanting to upgrade into bigger houses and sell their 3% mortgage home because they're not sure, what their job looks like.
You can't blame them. It's the lock-in effect, they're calling it, right? So if you have a bunch of equity and a really low rate, there's no motivation for you to make a move.
Right. And some people would argue with you and they would say, if they're sitting on a bunch of equity, they could sell the house and take that money. But,
True.
But the problem with that argument, I think, is because that's what happened in like 2007. But the problem with that argument is they're sitting in such a low mortgage that they would be upping their monthly payment to be in a rental by so much money that I don't know if most people, even if they get $100,000 from it, are really going to think it's worth it.
Well, they call that the 3Ds. Right. So if you really look at why would somebody move out of a low mortgage or a low rate? Because that is an asset right now. They call it the 3Ds: death, divorce, or debt. So those would be the three reasons. So most people aren't going to make a lateral move and have a much higher payment.
Right. Absolutely. And so, why would they, want to move in order to get that higher payment?
They
so
wouldn't.
They're not.
Yeah, now there's all kinds of reasons that people do. Obviously, job relocation, or maybe they're retiring, or maybe they just need a change, whatever it is. So there are certainly things that are going to happen. And you certainly can move from a higher price point to a lower price point and all those kinds of things. But one thing's for sure, if you have I think we looked at there's over 80% of the people had under a 6% mortgage, and mortgages are over 6 right now.
Oh yeah, they're almost 7.
Yeah, I think I looked at they're somewhere between 6 and 7 depending, but the 10 year's going up, right? The long rate. So that's very, very, very interesting.
Yeah, one thing we could see if we start to see a change in housing prices is investors dumping some of their rental properties, due to increased cost and due to, wanting to scoop that equity. So you could, and you're kind of already seeing that with Airbnb listings are kind of up. So you could see some additional supply if unemployment continues to go up for people, wanting to get out before prices go down.
It's possible. Jerry, can you pull that chart up real quick? There's a chart that we were looking at. Go down to the chart. So this whole thing is about the underemployment. Let's stop right there real quick. And I want to show you guys. On the left side are actual people, right? So these are U.S. workers unemployed at least 27 weeks. This is really interesting. Now, you got to kind of take the middle out because that's kind of the pandemic. It's not kind of the pandemic. It is the pandemic, I guess. But let's take a look at when it hit a low point, which we all know it was in, let's just say it was in 2023. If you go straight up, you'll see it's 1 million people. So from there to now, it's gone up in the over 600,000 people. Now, that's a significant number of people. If you go all the way over to 2018, you're going to also see that we've actually never really had it this bad. From 2018 at least. 2018 it was at 1.5. So if you take out the pandemic piece. So this is an interesting thing here because, they're still tackling inflation. And how does this all relate to real estate? It relates to real estate because as that number goes up, then that's more people that are in kind of flux. Now, obviously, we don't know their financial situations, but 600,000 people is a meaningful number. And, that's just in a couple year period. So those are, and the interesting thing is a lot of these jobs are healthcare, they're tech, they're things that even though some of those industries are growing, but we are seeing a fair amount of AI and automation actually kind of replacing a lot of this stuff. Even transportation, I think, Jerry, go down to, there you go, right there. So these are the numbers actually by industry. Transportation, believe it or not, is not that bad. These are all worse. But if you take a look at the financial activities, you think about how everything's kind of moving. This really is a white collar problem primarily. And so as I dug more into this topic, we start to see that this is really, people are valuing skills over degrees. And I think that's what we're starting to see is skills over degrees. And you guys really, I'm obviously being in the construction and real estate business. One of the biggest issues we have are trades. We're talking about electricians and plumbers and air conditioning and all the things, the people that we all need so desperately. There's not a lot of people pouring into that. They've been going into college and getting degrees and into more white collar roles. Now, there's nothing wrong with that, but I'm just saying that there's a big gap based on where things are headed. So those are going to be darlings of people are going to make a lot of money in those sections.
Yeah, absolutely. And it's just interesting, how this is going to affect colleges and how it's going to affect the market and even the housing market.
Well, it definitely is. And the second thing after unemployment is the low inventory. And we've talked about this a long time. Some of that is because of the lock-in effect. Right now, the homes, I think that's 3.7 months on the MLS. So that's national. Now, what they say is the average, depending on the market, is somewhere between 4 and 6. We've heard as high as 6. So what that means is that homes are sitting on the market longer and that inventory is starting to stack up. And kind of back to Danille's point, we're starting to see people move out of, which is always the first thing that goes, call it the second home, the Airbnb, the people, they might have some equity even in those, but they're not cash flowing and they're feeding them, and those are a little bit different.
Yeah, and people are locked into those low rates. But something I thought was interesting is, Jerry, if you want to pull up clip 1, it's discussing the boomers here. And it says only 15% of boomers are looking to sell this year. And among boomers who own homes, 54%, they never plan to sell the house they live in. And, they own 38% of the real estate right now.
Yeah.
So that's a big percentage, The truth is, I think that boomers, they always used to downsize. Like, I even look at my parents, for example. You would downsize a house and you would scoop the equity out. But now they're sitting at such low mortgages, and a small house would be so expensive.
If they have them at all. Let's don't forget the boomers are older, right? Mm-hmm. So a lot of those, like my mom, your parents, some of these folks don't even have mortgages. There's a fairly big percentage of people that actually have paid off their mortgages.
Right. And I think that these small houses are just so expensive for them to wrap their head around, because these starter homes that they used to kind of downgrade to have gotten so expensive, right? So like my parents actually a couple years ago were looking to maybe sell their home, but when they looked at what they could get for the price they could get it for, they just decided to stay where they were at. And I think another part of this is that, a lot of these people have big capital gains taxes.
Right.
If they do sell their home. Now, I know some of you are going to tell me, well, they get X amount of money because they're married. But some of these people bought their homes for like $100,000 and they might be worth like $700,000-$800,000.
There is an exemption for personal, but
there's a limit on the amount.
There is a limit. That's true.
Yeah.
Yeah. And you're right. And I also think, we're right in the middle of this transition of one new administration coming in and an old one going out. And I think there's a lot of people just kind of seeing what's going to happen there. There's a little bit of chatter around what some people are calling the Trump bump, actually, which is the tax policy and some of the economic growth. We still have yet to be seen there. But rates do not appear to be coming down into the 5s and 4s like everybody thought that they were going to be. That's a big deal. So if you guys were on my webinar, you saw that Redfin, Zillow, Realtor, National Association of Realtors, all these different groups all believe that home prices are going to continue to go up modestly, like somewhere between 3 and 4%, and that rates aren't going to change all that much. And so this is going to be kind of a little bit about what we've already seen, but there's not going to be really any drama, but we're still going to have real affordability problems still.
Yeah, it is interesting. When it comes to the boomers, I think a lot of them too are really kind of upset that their kids can't buy houses. Like, I think that's a thing. Or their kids did buy a house, but it's like a starter house, right? Like my parents talk about all the time, like if anything happens to us, your brother could move in here with his kids. Like, I think there's a lot of that too, where like the parents think like, okay, once I pass, I want my kids to actually have this home because they can't afford this home. I mean, even your brother and his wife were talking about that when we were in Seattle last weekend.
Yeah. It's a thing because, as you guys know, I have 2 kids. They're both in their 20s and they're saving. They're saving. And at the same time, the home prices are going up.
Yeah. And they're just seeing their kids not having the same housing opportunities. When I think if you look at the generation before, they had a big, nice house. Their kids had a big, nice house. They decided to get to a smaller, easier house and just sell that house. But it wasn't like they had this inclination where they needed to do something for their kids.
It's a little bit of a balanced market. Let's don't forget, we all just got out of a really, really, really kind of easy time. Like, interest rates were really low, and hopefully you guys capitalize on that period of time. I don't think it's going back anytime soon. The genie's out of the bottle there.
Yeah.
So, the one thing that's going to make house prices go down is more houses, and new construction permits are up. And, that's a big piece of the inventory. You're going to see that. So that's actually really, really good for the industry. The industry needs it. It's severely undersupplied. But I'll tell you, one of the things that I saw was the unsold inventory. We're talking about unsold inventory from 2023 went up by 27%. That's a lot. That's unsold inventory. So now it's still not even close to what the average has been, the year-over-year averages. So, which they say is 4 to 6 months of inventory on the MLS. So I would guess that 2025 is going to be one of these times where there's going to be more inventory added. Home prices are going to continue to creep up. But once inventory goes up more, then you will start to see housing prices level out. Because the one thing, more supply of anything, doesn't matter what it is, will actually, when the consumer has more choices, and the seller has less options, then you're going to start to see things normalize. But right now, it's still pretty active, and people I don't think people believe that home prices are going to go down anytime soon.
No, I mean, some people on here are saying that they are expecting them to crash or go down, but it's just hard because people are sitting in such low interest rates that most people that own homes, especially people that own homes 2020 and before, which is most people, aren't struggling with their payment.
Yeah, and you guys might know one of the things that we do when we're looking at where to invest, where to buy, is we look at where people are going, population migration. And so where are people going? They're, even for 2025, they're still projected to be the top 3, or Texas, Florida, and actually Virginia made the list of all places. Texas, Florida, and Virginia are still good. No, that's with the number of people. Now, you can reach into Texas, like in Austin, where I'm at. You can reach into Florida, and you can make a case that things are going down, and they are in so a lot of those markets. I'm talking about just pure people moving. And then you've got Colorado, Arizona, Georgia, North Carolina, kind of the top off the list. Those are those states that people are moving to. Now, where they move, what's going on in those markets, entirely different issue. But you want to be, you don't want to be a pioneer. You want to go invest where people are going. Whether it's in single-family, Airbnb, rental, commercial, office, retail, self-storage, it doesn't really matter. But without people, there's no rent, and there's nobody buying things. So you do have to pay attention to that one thing. And then from there, you got to dig down and see where, right? And you're going to have pockets that are going to be overbuilt. You're going to have areas that are going to be retracting, all that kind of stuff. But one thing is for sure, I don't think you're going to have a big relief with interest rates, and I don't think you're going to have a huge relief on pricing. And if you do see some temporary pricing adjustments, which we are seeing in some markets in Florida, it might be an opportunity to take advantage of that little dip. But I do think it's a short-term window.
Yeah, and Florida's its kind of own thing just because of all the insurance issues they're having here. California and parts of Texas are having the same issue. But the third thing is interest rates. So this is the third thing that everyone's kind of waiting. I have to laugh because, I follow a lot of realtors on Instagram and stuff, and they're always talking about dating the rate and marrying the home and all these things, right?
What does that even mean?
Well, it means if you love the home, your payment can go down once interest rates go down, right?
Okay.
So, but the issue I have with that is, people thought interest rates were going to go down pretty quickly. Like I have one of my clients in aesthetics is a doctor, and she tells me like, our housing payment's like killing us. Like I need rates to go down because we're like maxed out, and I thought rates would be down by now. And so a lot of people took that advice and kind of dated the rate, but the problem is the rates are not going down. Yeah. So,
well, like any date, you got to make sure you can afford it.
Yeah.
So whatever rate you get when you're on a date, I guess, you just have to make sure that you're fine at that point. And then anything else from there is a gift. In other words, your strategy shouldn't be for it to go down. It should be to be comfortable with wherever you are. Hopefully rates do go down if everybody wins. But don't forget, what would happen if rates go down to 5? A bunch of refinances, not a bad thing, right? Certainly that's good. But what would also happen is there would be another run on people using that low rate to invest again, and potentially could create another bubble, which is exactly what we are coming out of. So low rates, cheap money creates runs, and nothing wrong with that. But trust me, I'm in the game. Low rates help me, but I don't think your strategy should be rates are going to be a full point or more less next year, because I also think at the same time, especially if you're in a single family, you're not going to see a tremendous amount of relief. Now on the investment side, on the commercial side, which is primarily where I play, we've already seen those adjustments. So Office buildings are getting clobbered. Self-storage has been flat. A multifamily is down 30 to 40%. And now medical office is actually doing pretty well. There are sectors that are actually doing pretty well. And last mile distribution is doing really well. Anything that has to do with cloud, the servers and those kinds of things, those are doing extremely well. So there's a lot of sectors that are doing extremely well. Oddly enough, what's really doing well is the food business.
Yeah, I bet.
Like really good anchored grocery is doing extremely well. And so, probably food costs are way up. And as food costs go up, so do profits.
Yeah, absolutely. And I think that if rates were to drop, playing devil's advocate this year, I don't think they will either. But if they do, most likely you would see an increase in prices. The only way that you wouldn't is if the economy really tanks and people just don't have jobs.
And you got to see why is it? Let's run that out. Like if rates go down, some of you who are sitting on a car, let's say that's 2 or 3 years old, you'll potentially go get a new car because you're trying to replace out that monthly payment. So that's not necessarily bad. Same thing with houses. So what that does is if rates go down, arguably your rate on your mortgage payment would also go down. And that means that you would be able to afford more house or maybe just a house. And so that just creates more competition. It creates more demand on the existing supply, which is already low. So that's kind of the point. In 2008, there was so much supply from the fallout that it took years for that to unravel. And so one of the things that helped unravel that were low rates, because people not only were buying at 50 cents on the dollar for the actual real estate, but they were also financing it at, basically free money. So, that cleaned up that period of time, and that lasted quite a while.
So if the rates do stay high, do you think that makes the market stay frozen? Because it's kind of interesting. So I bought a home last year as a rental, and my payment, it was for sale, a 2-bed, 2-bath in Scottsdale, $600,000. My payment is like right around like $2,800. But the one across the street from me just listed for $750,000. And I was looking, and the payment is almost $5,000 a month. Wow. It's like $4,700 or something.
So $2,000 more per month.
Yeah, and
for a very similar home.
For a similar home, but my question is like, how are people affording that? Because most people can't afford. I mean, that doesn't include the HOA, the property tax, insurance. I mean, that's just the payment.
There was one thing for sure is there's no investor buying that.
Correct.
That's for sure. There's the rents. The income potential for that particular market is not even close to that, because you got $4,000 plus.
Almost $5,000.
Plus, $5,000 plus property taxes, plus insurance, plus operating costs, plus CapEx, plus HOA, all that stuff.
When it rents for about $2,800 a month.
That's the point, right? So it'd be negative. So the only person that can buy that is a probably like it used to be, a person that would move in.
Well, but also it's an expensive housing payment, though. For a 2-bed, 2-bath house, $5,000 a month. I mean, after taxes and insurance, probably $5,500.
It's more than that for sure.
It's expensive,
yeah.
And I guess what I'm wondering, the reason the market's frozen is because people can't afford the prices of the new houses. But it's like, if these people decide to unlist it because they probably bought it forever ago for a much lower price, would be my guess, then they can make money renting it, but they just can't make any money. They just can't sell it for that much.
It depends. Yeah. But again, let's say they did buy it a long time ago and they got $300,000 or $500,000 of equity.
Right.
To a lot of people's point here, that's something, right?
Yeah.
Then I don't know if it's their primary residence or not, but let's just assume it is. And then they have a tax over that exemption piece, but it's real cash. Mm-hmm. There's nothing wrong with having several $100,000 of walking around money. The problem is, then what? How do you re-enter, right, the market?
Right.
And that's actually the big issue, and that's basically what they're talking about with the frozen, right?
Yeah,
it's a frozen market.
But if the rates don't go down, like let's just say that they stay high like we think that they're going to, does it stay frozen or does it start to go down, or what really happens?
Don't know. Obviously, I think that inflation's not quite under control like the Fed wants. Now, we're talking about the Fed funds rate, of course, but so I do think we could see a little bit of relief. But you guys know how it's going to come. It's going to come in quarter point, maybe half point if we're lucky at a time. And it's not going to be that significant. In other words, it could take a $4,800 payment and bring it down to $4,500 or $4,400, let's say. It's still significant. That's kind of the point, because the house is still expensive. So if home prices go up, I think Zillow said 3.7. No, Realtor.com said 3.7. There's a bunch of them that all said somewhere between 3 and 4%. Let's just say 3.5%. And the average price is in the low fours. That's a lot of money. That's $12,000, right? So $12,000 is a fair amount, a lot. And so now you start to calculate that based on another, a quarter point adjustment. You got to look at the whole picture. The other thing that I think that is now going to be a big topic moving forward is what I would consider the third leg of the stool. So you got the house price, you got the interest rate, but now you have the operational cost of that actual house. And whatever it is. And so there's a really good study that Bankrate did. Just go online and Google it, Bankrate Housing Affordability Study. You'll find it. But it essentially says that to own a home is about $18,000 a year. Just to own it. Not including mortgage.
Right.
Just to own it. Okay, so what could that be? That's all kinds of things. That's insurance, that's property tax, that's utilities, that's CapEx. So that might be things that you have to do, the yard or the paint or the roof or whatever. And so you now have this other fairly significant issue that I think has crept up that most people didn't really consider entirely before. Although I'm generalizing, but $1,500 a month to own a home, not including mortgage, is a lot. And so that's that third leg of the stool that I think is actually going to be one of the bigger issues that's going to be discussed in 2025 is the affordability piece, because that is very, very, very high. Precisely kind of back to Florida. There are homes and there are insurance companies where, well, first of all, there are lenders that require insurance. And there are insurance companies that will not even insure in Florida. Now, they do have a state program, just like California has. So I do know that there's options, but they're expensive. And so you start to look at, even if you don't have a mortgage, how much does it cost to live somewhere, right? And in a lot of cases, $1,500 is more than rent.
Well, yeah. I mean, that's average. So then that can kind of creep it up a little bit. But yeah, it is expensive to own a home right now. And one of the things they talk about is homeowners know that they need to be able to make their mortgage payment, and they save up for that down payment as well. But what they don't think about are these monthly costs that are rising around, insurance, maintenance is a big one. I mean, I know our maintenance costs have went up significantly. I actually brought this up on a forum I'm on recently on Facebook, is I'm like, this preventative maintenance has gotten so expensive because the hourly on maintenance workers has gotten so expensive that what really makes sense to do preventative maintenance on versus just it dying early and replacing it.
Well, we have, like a lot of you guys, we have people that help us fix stuff, right? And we're paying our handyman over $70 an hour.
Yeah, like $75 an hour.
An hour.
And then I just had to have my place cleaned, and the cleaners were $80 an hour. And so, these things are, I actually had to look at that in my lease agreement, because my lease agreements that I have, cleaning was $150. Cleaning this time was $300. So now on renewals, I'm going to have to go back and adjust the cleaning deposit.
Yeah. And so what people might or may not realize is what Danille's going to do is pass that on to her tenant. Like,
Right.
so these costs, these things, they do get passed on. Not in the case of having our handyman come over and fix stuff. But when it comes to turnover, where it's Airbnb or rentals or maintenance of whatever it is, these guys are getting squeezed too, right? Like, I remember getting a conversation just about supplies and fuel for their trucks, and their costs are up, right?
Yeah.
Even the cost for them to go take a lunch break are up.
Yeah, I mean, the cost of everything is up, and people are commenting, I need to find new cleaners. I shop for those cleaners. That was the best price that I could find in the area. Every area is a little different, but for cleaners,
And by the way, Danille's nickname is T-Rex. Like, she can't reach in her pocket.
I budget
like
everything.
So she does not like to spend money.
Yeah.
I'm telling you guys, when she told me that, I didn't even question her because I know she'll get 10 quotes.
Well, what's crazy though is it's like, okay, so a water heater's $1,500, right? So it's like, yeah, I want my water heater to last. However, if the maintenance guy coming over to check the water heater, it takes him a couple hours, that's $150. So how much of that eats away into like replacing the water heater?
Yeah, that's a fair point.
I mean, so that's just, that was kind of my question I proposed, because I don't, I'm no maintenance person, so I don't fully understand.
We all know
how this
water
all
heater's
works.
not $1,500. That's why.
But I know that it's expensive.
Yeah, but it's not $1,500. That's a ripoff. That's a high quote. Go get a second quote.
Well, I got ripped off then.
Woo. That's a lot.
Although, have you bought a water heter in the last few years? Because those have probably went up in price
corrected.
too.
Okay, all right.
So anyways, it's just interesting, but the average home buyer needs to make $115,000 even to buy a home right now.
Yeah.
Which most people don't make $115,000, which is why most people need that dual income to even qualify to buy a home.
Well, that's why we kind of moved to that fourth piece, which is homes are becoming more unaffordable, period, right? Like in those three ways, right? It does not appear that home prices are going down. It does not appear that the cost to own homes are going down. And who knows about interest rates? Like, whatever I say is a complete guess. I do believe that you're going to start to see, especially with Trump in office, because he did this in the 4 years that he was there, beating on the Fed to try to get the cost of capital down, right? He's a real estate guy, so I would expect that, but might not happen. But either way, it should cash flow at today's rates. And if it doesn't, then pass.
So Eric said, you're talking to a plumbing contractor here. Water heaters are $1,600. She got a deal.
Oh,
and I'm the cheap guy.
Okay, all right, Eric. I stand corrected. She's right. She called me out. I haven't.
And then
bought one in
Nemo
a
just
while.
said electric water heater replacement. I just did it. It was $1,800. So things are getting very expensive to replace. So it's just it's an interesting point, right? Because you're like, this is how much stuff's going up that you don't even realize that if you haven't done it in a while.
Yeah, it's a fair point. I haven't done that in a long time, so I stand corrected.
Yeah. So before we go anywhere, let's jump into our Ask Ken questions. So this is our premium. If you want to sign up, go to kenmcelroy.com/join-now. We always take your questions. Abigail is asking, why do most renters and landlords seem to prefer vinyl to carpet, even in the bedrooms?
Good question. We can hose it down. No, it's a really excellent question. So here's the thing, Abigail. Vinyl typically is a little bit more. Now, when we say vinyl, it really needs to look more like wood. So it does cost quite a bit more. But the question is, how long are you going to own it? So my experience has been, if you allow dogs, you allow kids, let's say, because you can't discriminate against kids at least, there's going to be things like there's going to be paint and red wine and cats and dogs and spraying and damage and those kinds of things. So our experience has been that we very rarely have a carpet make it past the second renter. It can happen. For sure. But you got to think about what a carpet's going to look like in 3 or 4 years and whether you have to replace it. So you have to kind of calculate that in. So when you can buy this really nice wood vinyl, You can the tenant now has a lot more options. They can get a throw rug or whatever. They can still put rugs down, but from a maintenance standpoint and a long-term standpoint, you kind of make that investment in the beginning. But then if you're holding it 3, 4, 5, 6, 7, 8 years, you're probably not going to replace out for a long time. And so in a 10-year period, maybe you get 3 carpets if you're lucky, and you might only have to do vinyl once. So it's really a long-term solution.
Yeah, absolutely. And those listening on YouTube, feel free to ask some questions because I'm going to try to pull a couple of them. Nemo on YouTube, it wasn't really a question, but he said something I think we should touch on. He said, I'm struggling with tenants that don't know how to live in a house. Never change filters, clogging toilets and dishwashers, washing machines, etc.
Danille, this has been her frustration.
It is my frustration. It's actually one of my New Year's resolutions is to get better about this. But I think that you need to set expectations right when somebody moves into your rental. You need to explain to them what's their responsibility and what's your responsibility. In the lease, right? And so things that are their responsibility are things they break. Like if they clog a toilet, like they clogged it. That's not your responsibility. But when it comes to like filters and everything, you actually have to show them how to change a filter. You need to go over it with them. Most people haven't done that before. But what you can do is when you send a handyman in for a different issue, you can have them check the filters. Yeah. And if the filters are dirty, you can charge them to have them replace them.
That's what we do. Yeah. So first of all, these rentals are not lock and leaves. Okay. Mm-hmm. So there are times where you should be able to go in or there are things and take advantage of that opportunity to go in and do maybe more than just one thing. So if you have a relationship with your maintenance person, Danille's right. You want them to bring the filters with them as an example. Maybe also look at other things that could be issues in there. I think the question kind of revolved around what I would call an abuse of the landlord. You kind of went through this in the beginning where you were getting calls all the time. So we have tenants that call every once in a while as needed, and they're civil. Then you have others that call all the time, right? And so I think you've done a good job of handling that with right?
Yeah, I think that you need to have obviously boundaries as a landlord too, and you need to make sure they're emailing you and not calling you. They should never be calling you. The only time they should be calling you is if they have a true emergency. Other than that, it should just be through email. And you just need to be clear on what you're going to cover and what you're not going to cover. And it should just be black and white, really clear, really easy. And you need to explain this to them and have it in writing, when they move in. So that way, you're setting your standards.
And that there are landlord-tenant laws in every state. And these are super clear too. So we used to call them fire, flood, or blood, right? Those are emergencies. Fire, flood, or blood as an example. Everything else, there's a kind of prescribed time frame that's within your rights, right? In Arizona, if air conditioning goes out and it's 105 out, then obviously it becomes more of an issue. You need to make sure you have your team, like Danille has. Like she can call somebody in an afternoon and that person will be over immediately, right? Mm-hmm. For those kinds of things. Everything else is not an emergency.
Well, tenants think everything is an emergency.
Correct.
So, and I made the mistake when I was a new landlord of feeding into that energy, like this has to be fixed right now. I can't go without the AC for a night, But like you can't feed into that. You have to be non-emotional, and it's just you have 10 days as a landlord.
This is really hard for her, by the way.
It is hard for me. And you have 10 days as a landlord. Of course, you're probably not going to take 10 days, but you might take a couple of days. I mean, because what'll happen is you rush in to get these contractors in to get it fixed, and then they overcharge you. They lie to you. I had an AC go out, and my AC guy's like, I can't come for 2 days. Well, my tenant's freaking out. I get someone the next day because I'm like, you know what? I don't want to deal with this.
And don't forget, your tenant, actually, a lot of them want to be there too. So that just complicates it even more.
Right.
So you're trying to figure out like when a tenant's home and when the contractor can come.
Yeah, exactly. So they come the next day, which the tenant's already mad because they thought that the contractor should have came that night. Okay. So comes the next day, tells me that I need to replace my whole AC unit. And I'm like, okay, well, maybe I do. It's kind of older. So you're like, call him and let him explain why. So he explains why. You're like, that makes no sense. Get your normal guy out. Well, I'm like, okay, so the normal guy could come out the next day. So now I have the one guy out. He's telling me I need to replace the AC unit. I have the tenant mad because...
Which is, by the way, it's like $6,000 or $7,000 or something.
Yeah, and I have the tenant there, and she's like, well, it needs replaced because that, you got to get it fixed, whatever. So then the next day I have my normal guy come out. He fixed it in 5 minutes. So, and then I called the other company back, and they didn't even bill me because they knew they were full of it and were trying to screw me over. So the point is as a landlord, you're going to pay so much more money to feed into these quote unquote emergencies that aren't real emergencies. And you're going to spend way more money. You're going to get screwed over. You have to use your core team people. You just might have to wait a day or two. I mean, the tenant just might have to wait because then guess what? The AC went out at our house last summer and we didn't have air for 5 days and it was miserable. But that's our house. Because our guy wasn't available. So you have to, and then they had to order, the parts and everything. So, you can't feed into tenant energy. Well, I should do a whole thing on that, tenant energy.
By the way, obviously we are customer focused. We want to be customer driven. But like anything, there has to be boundaries. It all has to be in writing. Has to be legal. And but like a lot of things, there are people that make small things into big things, and you just have to have a system for that.
Yeah, you just can't feed into that. You just have to have your standard processes and procedures, and whatever those are, that's just what you have to follow.
Yeah.
So Bob is talking about the new real estate laws. So he is saying that he, was trying to get some information on a house, and he couldn't even without signing the listing agent wanted him to sign an agreement to tell him any information about the house.
This is more in your world.
Well, he wanted to know your opinion.
Oh,
because I kind of gave him mine, but he's like, I want to know what Ken thinks.
Sure. Yep. Well, first of all, I be careful what you're signing, right? I think right now there's a lot of things that are happening where people are signing things and they wish they wouldn't have, right? I don't have a problem at all if you're literally signing something for a showing on one house and it ends the minute you walk out. So you walk in, you walk out. If you buy something right there and you walk and you're unrepresented, let's say, I have no problem with that. But other than that, I think that this is a lot of what we're hearing is it's been a little bit of an abuse of the customers that are actually looking at these homes.
Yeah.
And they're actually trying to get them to sign and get clients this way, right? So they're listing these homes, and then when the people come in, they're getting them signed up as well. So it all boils down to what exactly you're signing. I still like the old system personally. I think it's going to go back. There's going to be some kind of a hybrid. That's my guess, because it's a bit of a mess. Mm-hmm. The system has years and years and years and years of working through the kinks, and then they changed it. And so getting a traditional buyer representative, I think, is a good thing for because it and then having a little bit of tension between a listing agent and a buyer's agent is good. So whenever you have two opposing views, in other words, if when you walk into a listing agent, they're representing the seller of the home. You got to understand that, right? And so if you're signing that up, even though they're supposed to be representing both, they're in a pickle. Because one, they're trying to sell a home for a client and they have a listing, and two, they're trying to find a buyer. And so I personally believe it's always good to have two. I really believe that, because what you're going to have is you're going to have kind of this push-pull, which is typically good. You're not getting taken advantage of. You're being represented, and so just be careful. I just think you should get yourself somebody to represent you, and be careful if you walk in on your own. Be careful what you sign.
In certain states, I was talking to somebody else about this recently. Certain states require an attorney, so it requires if you're unrepresented, that you have an attorney. And so I think something like that. I mean, attorneys may be more expensive than a realtor, but I think you got to have somebody. You cannot represent yourself and just wing it. That's
unless
a huge
you're an
transaction.
Attorney.
Yeah, unless you're an attorney.
But just again, it goes back to what you're signing. Be careful of what you're signing. That's all. Make sure you read it. Most people, what they do is they They take a boilerplate contract, they walk in, they sign something, they look around, and then they realize that they got locked into something. So that is actually starting to flush itself out now.
Right.
There's a lot of issues around that, a practice, I should say, right? And so I've said enough about that.
Yeah. So Krasimir, sorry if I'm butchering your name, says, I'm a fan of yours. I have a question for you. How do you deal with debt to income, as this is an important factor in Europe? I can't get more than 50%, which makes it difficult to make it infinite.
Debt to income. I guess I'm not completely
Maybe
clear.
with lending, like they maybe need. Well, I guess debt to income is the same here. Actually, it's probably for lending. So like your debt to income can only be 50%.
Sure.
I think it's about the same in the States, isn't it?
Yeah, I think so. A couple things. One, what you want is a lender that's going to lend against the cash flow of whatever you're buying. So whether it's a business or whether it's a commercial office building or whether it's a residential building and you're going to rent it, let's say. So that's a debt service coverage ratio, kind of a loan. And so what you're going to want is that loan to be based on the income from whatever it is you're buying, if there is any. If there isn't any, of course, it's going to be more of a problem. Then you got to sell them on. So let me give you an example. If you're going to build a high-rise condominium project in Miami, let's say, because this is how they do it. They go out and they get a bunch of sales contracts, and they pre-sell all these condos, and then they bring that into the lender, and the lender's lending against the potential of those closing and people buying condos. So that's how you kind of pre-fund development, pre-fund construction. So when what you're describing is that they're actually looking at you as the individual. And so you got to look at maybe other types of lenders that actually look at the asset itself. So that would be a scenario where you're actually buying a home yourself, right? What do you make and what's your payment? I get that. But beyond that, there's another layer when you're buying investment businesses or investment properties or things like that, where the collateral or the whatever it is you're buying is actually going to pay off that debt.
Yeah, and your income, like for each rental property that I have, the income is going to offset the debt, right?
Yeah.
Because I'm getting income. So as long as you're claiming it on your taxes, then each rental you have should be claimed as income, which then helps your debt to income in order to qualify.
Right.
So Richard made a good comment on YouTube. He said the Fed usually lowers rates due to financial stress in the equity debt market.
Yep.
People need to be careful what they wish for.
Yep. Yeah, that's a good point.
Mm-hmm.
He's right.
And then let's go back. So Dustin is asking, can you explain a little bit about DSCR loans and how they impact a rental portfolio?
Debt service coverage. Yeah. So the way think of a debt service coverage of 1.25. So what does that mean? What that means is that there's 25% more income coming in above the mortgage payment. So that's what's a debt service coverage ratio. So 1-to-1 means there's just enough income to cover debt. 1.25 means that there's a 0.25% or 25% buffer that actually you've got. And so the lender, they're again going back to what the property income or whatever monies are coming in from whatever it is you're buying. They look at the debt service coverage, and you're gonna. We already saw those. What's happening right now is as rates go up. So you just take your net operating income, NOI, which is income minus expenses, divided by your total mortgage payments. That's it, and that's your debt service coverage. So that's income divided by mortgage payments, and an average debt service coverage ratio is about 1.25.
Awesome. Well, so 2025 is going to be an interesting year. Hopefully you guys follow us. We also have a podcast that you should check out. It's called The Ken McElroy Show, and we kind of go into more detail there on, our personal lives and different ways that what MC Companies is doing. And so it's a great show. You should check it out.
Yep. Sorry I was late, guys. I had a 3-hour drive before this, and there was actually a forest fire.
Oh, wow.
Shut down the highway, so
Well, we
apologize.
will see you guys next week.
See you guys.